Are we going to have deflation or hyperinflation? Should we sell our stocks or buy more? Hi, I'm Henrik from Value Investing. First and foremost, if you want to expand your financial skills, make sure you subscribe and hit the bell icon not to miss anything. And also, if you prefer to see subtitles, they are available. Today we are going to understand what we should do with our portfolio in this volatile economy. Will the market melt down or melt up? We know many significant economists that know everything about what's going on in the economy. And I love them. I don't imagine my life without listening to their speeches. I really enjoy listening to the economic forecasts of giants like Robert Kiyosaki, Peter Schiff, Mike Maloney, James Richards, Harry Dent, Chris Martinson, Ray Dalio, G. Edward Griffin, Garrett Gunderson, Ken McElroy, Andy Tanner, Richard Duncan. I really can continue naming them, but let's stop here and ask ourselves, do they see the future of the economy the same way? Absolutely not. And instead, they all forecast the future of the economy differently. Yes, if we have a question like deflation or hyperinflation, some of them will vote for deflation and some of them will vote for hyperinflation. They are such unique individuals that even some of them tell that we will have both deflation and hyperinflation at the same time. So then you might be thinking, I'm an investor, I'm not a professional economist, so whom should I listen to understand if I should sell my stocks or buy more? Didn't you just agree that you are an investor, not an economist? Then why are you trying to predict the economy? Are you buying businesses or are you buying an economy? If you are an investor, you should be buying companies, not the economy. That's it. My advice is to listen all of them. Those are people then when they talk, people listen. But that absolutely doesn't mean that you should sit on 100% cash or equity. If you are an investor, listen to Warren Buffett, Charlie Munger, Benjamin Graham. They usually don't try to forecast the economy. What did Benjamin Graham wrote in his book, The Intelligent Investor? Did he write that when there is a threat of deflation, then sell off all of your stocks? No, absolutely not. Instead, he wrote to have 25 to 75% of your portfolio in stocks and the other 25 to 75% in bonds. And do you know why? Because Benjamin Graham knew well that nobody could time the market. By the way, smash that like button if you are getting value. That will help us do more videos for you. Okay, I will tell you about the best indicator that shows to sell your stocks or buy more. And that indicator is bargains. If you see more bargains, then invest your money in stocks. If you see wonderful business with strong fundamentals being sold at cheaper price than its real value, and you think that the business will have big success in the long run, then buy the shares, regardless your economic expectations in the short run. But if you are having real difficulties in finding bargains in the stock market, that's an indicator of an overpriced stock market. Then go for cash or bonds mostly. That's simple. Don't make simple things complicated. But you better stay within the 25 to 75% ranges. Yes, you can sometimes exceed that limits, but that should be in extreme cases. I think that kind of opportunity arises once in a decade or two. Currently, I have very few companies on my portfolio because I don't see many bargains in the stock market. So does Warren Buffett, and that's why he has almost $150 billion in cash. Not because he thinks the economy will collapse soon, but because he doesn't see many bargains in the market. We act as an investor, not as an economist or a futurist. We don't overpay for businesses because there is still hyperinflation to come. So focus on the businesses, not the economy, and learn the history. There is no clear correlation between the stock market and the economy. There have been too many divergences between the stock market and the economy in the history. The stock market moves based on too many variables, and some of them are the emotions, beliefs, and future expectations of the investors, not the actual economy itself. Let's be clear, I don't claim that the economy has absolutely nothing to do with the stock market. I really don't do it. Surely the stock market and the economy are based on the businesses. But know the difference. One is based on reality and the other one is based on the imagination of investors. And that's why they are not that correlated. But yes, you should have some ideas about the economy, and your approach can have an impact on your portfolio. But you shouldn't give high importance to that. You are not an economist. You are an investor who buys businesses. Even if you are an economist, why you should be sure about your predictions when the greatest economists firmly believe in opposite outcomes? Where should your confidence come from? Even many things are still depending on the government decisions still have to be made. Just don't be a victim of the stock market while trying to forecast the economy. An intelligent investor is the one that is prepared for all directions. Don't bet on something with all your wealth. I will surely bet on some businesses with all my wealth, but if the prices drop 80%, only in that case. But that happens once in a decade or two. But if that happens, you will see bargains everywhere. So again, that will be a focus on businesses, not the economy. To know if the business is a wonderful one and if there is a bargain or not, click on the card here to watch our video series with episodes. Now make sure you subscribe and hit the bell icon to get notifications when I upload the new video so that you don't miss it. And if you could take any value from this video, hit the thumbs up button and share with your friends. And I want to know your ideas about coming deflation or inflation. Leave your comments below. Thanks for watching. Watch the next video.